Nasdaq's up 31. S&Ps are up 10. You get gold down 12 after hitting all-time highs last night over the 1900 mark. Silver's off 14 cents. Platinum's down 20. Bonds are off 20. Dollar is down 18 at 73.98. What's going on, brother?
So we've already had, let's see, it's 10:07.
Yes.
And we've already had about a 270-point swing.
Yeah.
You know, we
it's
were
a beautiful
right,
thing. No,
up 170 in the middle of the night.
Yep.
And down to flat.
That's
right. Before the
or slightly
opening.
negative.
Right?
That's right.
Okay, and back up 100 points.
And folks,
I mean, what swings?
It's beautiful.
Holy cow.
And folks, if you take a look at the S&P that I have up right now, the bottom line is that it tested the lows of yesterday, did it with lighter volume. The SPY are at 113.97, and right now it's on its way to 115.88. So this is what we did this morning. You know, you had the spike up yesterday, had the juice behind it, 24 million shares.
Yeah. You
come back with 6 million. You came back this morning with 20 million versus 24 million, and it's taken over those highs right now. So it's going to be, it's about, the thing that is impressive, right, on a short-term basis, is that you had all the Goldman Sachs folks lawyer up last night.
Right.
Well, they lawyered up before that, but it came out that they lawyered up last night. And it's serious business, folks, because it's, you know, the Department of Justice, and what it's about is basically lying to Congress.
Yeah.
Now, you know, they can fudge books forever and seem to get away with the SEC. The real question is going to be, are they going to get away with Congress? We'll find out. But that being said, you know, even when I was on last night, we knew it was testing with lighter volume.
Right, right.
And I know you bought the S&Ps right before that, right?
I did, and you know, because you came to my office and I said, look, I'm trying to find every reason to not buy.
I know,
right?
exactly.
It was exactly what I said to you.
Right.
I said, you know, look at this, look at this, look at this, and we both, you know, reached the same conclusion. So I went ahead and, you know, said, okay, we're buying, you know, sent out, you know, got the order out as quick as I could to all the subscribers.
And it was the right decision. Now, folks, this is what gets so bizarre. There's no doubt about it, okay? That you have, okay, so we've tested those bottoms, and, you know, what happened yesterday is actually we weren't going higher. We were coming in lower, and it was testing with dramatically lighter volume after the test had been done on the daily and on the weeklies, okay?
Right.
Now, this part of it was the most bizarre, though. Then I said to you, you know, I'm telling you, man, it's going to be crazy because this is a chance that the market could have blown apart. Yeah. Because it's huge trust issues out there. No one trusts the market. You shouldn't trust the market, folks. They're basically robbing everyone. You know, they're divvying up the. That's why we trade versus, you know, invest, because they're divvying up, you know, these proceeds. There's no two ways about it. Yeah. But you can see what happened. You bounce out of it, and all that means is that they're operating like they should be operating. You know?
Well, you know, it's one of those things where you know what we know is, you know, our backs are up against the wall.
Right, for sure.
You know, and we've been testing, and so, you know, so you know, I'm trying to put it together with all of the information because we have such a great group of contributors here. Right. You know, good minds, and it's always great to be bouncing things off.
I like the howling myself.
Yeah,
No, I do. I swear to God, man, I do. But I'm telling you, folks, if you haven't got your head wrapped around what happens in the universe, wrap around it, because I'm telling you, Steve has. So there's a couple workshops out there that are free right now that you can look at, right?
That's right.
Yeah. Look at them, folks, because it is like common sense, but it's really not common because you never taught it anywhere. Do you know what I mean?
No, no, you're not. Look, you know, that's what's so cool about what it is that we do here with the entire group is that, you know, if you take a look at, you know, everything that I had put into education, you know, colleges or what have you. Yes. Everything that my kids are, you know, what the most important aspects of life. First, you know, it's relationships. Okay, so it's your interpersonal relationship aspect, and so much of that has to do with your mind and your attitude. Right. Okay. Absolutely. And then it's with regard to, you know, how you're going to go ahead and manage your finances. Right. I mean, those are the issues that lead the, you know, the stories across the world. Yeah, big time. But when it comes to your personal finances, this stuff isn't taught. No, no, maybe it's taught by your parents, but how many children have great relationships with their parents? Like, most children blame their parents for everything. You know, the reason that they were held back, right? You know, I've been to so many different you know, self-help, you know, and what I watch, you know, everybody has reasons, everybody has a story that holds them back. Really? But it's just a story. That's interesting. You know, it's a story. And many times, it's things, it's interpretations, you know, and that's what we do here in the marketplace. Right. It's always about interpretations. And many times, as a child, it's something that you really misinterpreted, you know, that maybe, you know, it wasn't really intended the way that you might have told your son or your daughter, or the way, you know, because you're really trying to teach them some other lesson. But, you know, and so everybody has a story that's holding them back. There's people that right now are telling themselves stories about holding them back from even getting involved with the markets.
Right.
You know, and usually it's about losing money. Right? Because nobody, you know, it's no matter what. Hey, look, if you're young, you know, it's you don't want to lose money. If you're old, you don't want to lose money. I mean, that's a common. You know, of course we don't want to, but that's why, you know, you mentioned the free webcasts that we do. Right. They just go back and take a look at the one from last week on Wednesday, and they just understood just the 1% rule. How many trades you'd actually have to lose if you? I don't care whether you had 10,000 or 100,000. How many trades in a row you'd have to lose if you just risked 1% of it all the way down? It's like 688 trades you'd have to lose.
Right.
To double that money, all you need with just a 2-to-1, because, you know, we always talk about 3-to-1.
Yes.
For just a 2-to-1, all you need, I think, is like 35 trades in a row to double.
You know, it's
a math game.
Huge.
It's a math game. And, you know, look, when we go take math classes, they're not teaching you this. They're teaching you some other stuff.
Right. You know what's wild about this conversation, folks, is that Angie was away for the weekend with one of her girlfriends. They were at Santa Fe. There's this big Indian market, right?
Yeah.
So on Saturday night, I'm out with a couple friends, right? And we're, you know, we take the boat out. We go groove. We're down, you know, a couple places, and we're all talking. And we just happen to be talking about, you know, growing up. And, you know, I said to one of these guys, and what ended up happening is that people all grow up differently. Do you know what I mean? There's different amounts of money that are in there. And in this particular case, there were these families were very well off, okay?
Yeah.
And I said to them, well, I had it made. So they're looking at me, and one of the guys said, well, what are you talking about you had it made? Do you know what I mean?
Yeah.
You know, you grew up in South Boston, you didn't have anything. I said, no. I says, I absolutely had it made. And you know what's interesting here now, and I didn't even really realize until when you're speaking right here, because I've never had the attitude that, oh, it's someone else's fault.
Yeah.
Right? But you know where that's from. Now, it's sad, but it's not sad. I'm not saying this story because of the sadness in it, folks, okay? I'm saying it because it's funny how we can react to certain things, right?
Yeah.
Well, my father died when I was really young, right? And so what ends up happening when anyone has a problem, I say, well, hold it. If you're alive, what is the problem? So there's like never a problem. I might have a problem, but it's like, hold it, I'm alive, man.
Yeah.
You know what I mean?
Yeah.
You know, and so it's funny how that works.
Yeah.
And that's what I said to them. I said, well, hold it. You know, you can do anything you want in life. Do you know what I mean? And I think what happened there. What happened is that he gave me what I needed really young, and said you can do whatever you want to do. So that's all I remember.
No,
and, you know, it's wild how that works. Isn't it?
No, absolutely. No, absolutely. You know, and it is those experiences. Okay, and many times, unless you really spend any time and go back and kind of, you know, understand maybe how you interpreted it or how you use that as motivation.
Right.
You know, because people are either running away from something and running towards something. Usually you're running away from fear and you're running towards something you want. Hopefully, you know, that's what you're doing. But you know, it's like, you know, what's so great about trading is there's two sides of the trade.
Yeah, big time.
And with regard to stories, whatever story it is, whatever incident it is, there's always two sides of the story.
That's right.
You know, and you can find the automatic negative thought.
Yes.
Okay. To any you can use that with regard to, you know, your situation and your dad and what you know. I mean, you know, I know that story, and you know, you could easily go to the negative piece.
Oh
of
yeah,
it,
right.
But you know, the other side is what is, you know, there's always something else to be learned, some other motivation or what have you.
Yeah. Big time.
Yeah. So you know, and what's great about these markets, what I really love about the markets is that when you really start to get your head wrapped around the information that's in here, whether it is a candle, whether it is, you know, a retracement, whatever it might be.
Yes.
You know, the market, the reading the charts don't lie.
No, it's gleaming information.
Right?
It's giving you information. It
is. No, it just simply doesn't lie to us, which is so great. So you don't have to watch television. Right. You know, you don't have to read the newspaper. You know, if you spend time with us here at TFNN, all the contributors, whether, you know, it's the educational classes, the university, whatever it is that we've got going here, you will be able to get your head wrapped around this stuff.
That's right. Because life's a mystery to be lived, not a problem to be solved.
Absolutely.
No doubt.
Absolutely. You know, in one of the charts that I've got up on my screen, so hopefully you're watching us on Tiger TV, you know, live on Channel 1, and I know that you know, I kind of heard through some emails I got last night that maybe you and Larry had talked about this chart. And the chart here that I'm looking at, folks, is a weekly chart that I did on the NYSE. And one of the most important things that you should glean out of this chart is it goes back to 2008, and I showed this hammer candle that actually was from the week of September the 19th. And you can see these hammers act as, what happens is during that hammer candle is, you know, you had wide price spread during that week.
Yes.
Well, shoot, we've got wide price spreads during the weeks right now that we're in, okay?
Yes.
So that's a common theme. And what it shows you during that week is even though you had wide price spread, you had the bulls in the marketplace actually take control that week. They were able to push the price up and almost close at or near the high.
Right.
Okay, and so it's a real powerful piece of information. And what we have going on right now is we happen to have a hammer candle that came in on August the 12th.
Okay.
Okay, you know, at a low as we were coming down.
Right.
Now, if you go back to 2008, when we broke through that, folks, that took us all the way down to March 2009.
Dangerous.
And it was a huge leg.
Dangerous, yes.
And so if there's one thing that you really should be, and these are set up in the other indexes as well, but, you know, what's nice about the NYSE is it covers a broader base of stocks. It's really what's going on in the marketplace. And you just need to really pay attention to that. That's why when Tom, you know, and I were talking yesterday afternoon, I said, look, I'm trying to find a reason to not go long.
Right.
And I was like, you know, and I could, and really the only reason would have been if we break that candle.
Right.
You know, so then it would just boil down to an entry price, you know. So do we enter now? You know, do I have a wide enough stop? You know, how do we do the money management piece of it?
Exactly.
And because if that breaks, folks, I'm telling you, you know, it is game over. Because when you use Tom's volume analysis, it takes us back to the 825 range.
Right.
Well, you break this, it takes you back there. In a
heartbeat. In a heartbeat.
Just a normal retracement that we try to teach folks.
Yeah. And, you know, with the news, with the Goldman news simultaneously, folks, this is when you can learn a huge amount about how markets actually move. Because, see, you could, common sense-wise, we could sit here and say, no, that had to bust everything apart. Well, you know what? It didn't.
Well,
you know?
Picture this. I'm sending out the Twitter alerts and the email, and then all of a sudden...
And I walk in his office, and I say, well, you know, it just happened. But at the same point, I'm saying, I've seen it before. And what does happen is this. That's when it's absolutely counterintuitive.
Right.
But if you stick with your system, the bottom line is that it's all about how much you're risking for what the reward is.
Absolutely.
You know,
absolutely.
That's where it comes down to. Now, it's going to get interesting with gold out here. You know, gold, we reached all-time highs last night. The little baby gets up there and gets up there good. You know, when we're talking about up there, we're talking about $1,917.
Amazing.
You know, and it's refusing to back off. It's down $7, but that's not a big deal. You stay right there, folks. Steve and I are going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Direction's alternative strategy funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Direction's alternative strategy funds, please visit tfnn.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. And, we have the Dow up 116 right now. NASDAQ's up 34. S&Ps are up 10. Greenspan is out here, folks. He's out with a bunch of quotes. I'm going to read you a few. One of them is that it's about the housing market. The housing market appears to be emerging from its recent tribulations, and the worst may be over. I suspect that we're coming to the end of this downtrend as applications for new mortgages, the most important series, have flattened out. Now, folks,
this is great.
I want to pull up the housing market for a second, and I'll pull up Lennar, and unfortunately I got to bring this back to 2005 because that quote that I just gave you was from Greenspan in 2006, and of course, in 2006 to be exact. Well, let me get the one he said it. Okay, so in 2006, Lennar was trading at in October. This was October of 2006.
Yes.
It was out there. It was at $47. So bottom line is that, of course, went from $47 down to $3. Now, the reason I just brought Greenspan up is this. Greenspan's all over the news this morning. And what Greenspan is basically saying is that the Europeans are going to fall apart. Listen, he may have a deal there. But that's not my point. What the point is this. So check it out. There's right now, you get PIMCO,
yeah,
right?
Right.
PIMCO, folks, is pushing their book in a big way. PIMCO wants stimulus in a huge way. Alarian's out on the press. Bill Gross is out on the press. Greenspan works for PIMCO.
Right.
He's out there.
That's right.
You know what they want, folks? They want free money. And the amazing part to me about all of this, right? All these big corporations yell about free money until they need more free money and want more free money.
Right.
And they want it all, folks. They want it all. This is all publicity. It's done very subtly. It comes underneath the marketplace. On the way into work this morning, that's all I'm hearing. I talked to O'Larry I talked to PIMCO. We need some big stimulus here. Now you get Greenspan. Everything's going to fall apart. Give me a break. It's just, it's amazing.
No, even, and I agree, because, you know, I woke up, I saw the futures were up like 170 or what have you.
Right.
And I said, what
what's going
on?
Right.
And then I hit my button to take a look at the news stories, and the top news story released is, you know, QE3.
Yeah, was it? Okay,
you know, and I'm just like, well, what happened overnight?
That's what they want.
But actually, folks, look, you know, and here's what that helped me to do. You know, yesterday was taking a look at reasons for us to not go long,
right,
and not play this bounce. Because look, I'm not sitting here telling you, or I don't have the belief that what we're going to be doing is that we've made a huge bottom. We're going from here. Now, if there's another QE that comes out, that's a different story because we can learn from the last two.
Sure.
But I am looking for at least a bounce to pull us up into the new moon and a bunch of other cycles that are going on.
And when is the new moon?
It's on Monday.
Ooh.
Okay, so you've got Wouldn't
that be sweet? Yeah.
Yeah. So you've got a couple of lunar cycles going on. You've also got on Tuesday. There's an astro cycle that's also going on that has an 80% chance of either picking a high or a low.
Okay.
Okay. So I know that from the studies that I did over the weekend that we're going to be talking about tomorrow in the webcast that I do for my subscribers.
Right.
So knowing that was there and putting everything else together, plus the studies that David White has done, you know, and I know he talked about this in his shows, you know, and he goes back and takes a look at, you know, all the stocks that are out there,
right,
how things are coming in at lows, and so you know, so when I put all of those things together,
yeah, exactly,
it's what said, okay, here's now, you know, I didn't want to go all in, but we did a proper money management, we took a piece of it, and said because what I'm really doing, you know, is really looking for our next place to go short.
Right.
Unless there's some other indication that we shouldn't, okay? Which is always possible.
Right.
But, you know, from all the other indications that are out there, you know, we are in this long-term trend downturn.
Right.
And it's going to be very tough to bust through. Yeah, it's going to be very tough to bust through a lot of the aspects that are up sitting above us.
Right.
So I think the better trade's going to be going short.
Yeah, no, I agree.
I know folks don't want to hear that.
No, it's terrible. Listen, it'd be a lot better. It'd be a lot better if we say we're in a bull market, and we're not, folks.
Yeah.
Oh, and you know what? Listen to this. So check this out. This is unbelievable. If you remember, Angie stole my bear, you know.
Oh, yeah, that's right.
I got this Indian bear.
That's right.
Angie stole it, and you know what ended up happening? Is that as her and her girlfriend are shopping, right?
Yeah.
She had to call me, and she was explaining to me where to go because they were looking for this rug that she had bought before, and they needed to store.
Yeah.
So what's hiding in the drawer?
Oh,
my bear.
Oh, that's great.
I got my bear back.
That's good.
Isn't that funny?
That's good.
Oh my God, I couldn't believe it, man.
Yeah.
Europe right now, folks, you get the FTSE up 0.5%. You get the DAX up 0.9. We get the CAC roll in Paris up 1%. Our markets, Dow's up 1 1/10, and the S&Ps are up 1 3/10, and the NDX, the Nasdaq Composite rather, is up 1 6/10. We're going to be right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
And it's my very great pleasure to announce our winner in the Great Panther Silver Coin Giveaway, Patricia Keith of Framingham, Massachusetts. Patricia, congratulations.
Thank you. Thank you so much.
Are you the kind of person that's lucky that wins a lot of things in life or not?
Yeah, I do.
You do? What do you think you attribute this luck to? Is it good living or what?
Positive thinking, yeah.
That is the key. Did you ever think you would win the Great Panther Silver Coin?
No, No, I didn't, but I really appreciate it. Thank you.
And how long have you listened to TFNN?
Oh, my gosh, 5 years?
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien, the Money Masters. We do appreciate you joining us every morning. Dow right now is up 114, Nasdaq's up 35, S&Ps are up 11, gold's down 11. And, what's wild here, Steve, is that the FDIC. So check this out, folks. This is really good news. The FDIC, this is the first time since 2006 that the list of banks that are problem banks actually shrunk. And it's shrunk by 23. That's big news.
Yeah,
I mean,
it is.
It's interesting, and there's a certain amount of folks that won't want to believe that.
Yeah.
But this is what makes markets, folks, okay? So it's going to get interesting to see how this shakes out coming forward, because at certain points, I mean, the debt's going to be gone, because it's going to be wiped out. I mean, that's the reality. And, people are going to get hurt, and equity holders are going to get hurt.
Right.
But little by little, those things are going to come down the pike, So
what's going on with the XLF then? So if they're pushing out here that the financial institutions are okay, you see any short-term trade?
It's interesting. I see what you're looking at. What the XLF just did, folks, it just got under the low of that 1204, 1181. It rejected it. You're at 46 million shares. So it's like, okay, is it going to bounce back up to the 1318? Well, you go right to Bank of America. BAC is the number there.
Yeah.
And BAC hit a low today, $6, 601. BAC is still saying, though, it's going to be back down there, because we're at 187 million shares. It was busted 682. It's like, okay, that's a shorter term deal. Inside the financials, I think, are going to be the longer, bigger story. And the real question is going to be, do equity holders take the hit? And they kind of recapitalize somehow. There's a banking analyst out there this morning, and he's a very famous banking analyst, Beauvais, saying that, hey, BAC doesn't need any more money. Well, I'm surprised because that means he's believing what's on their balance sheet. I don't believe it. I don't believe they know what's on their balance sheet. And, you know, it's one thing if you understand what's on your balance sheet, folks, but I believe that they have loans that they don't even know are there.
Sure. And
that's huge. That's problematic in a big way. You know, the country right now, right? So let's talk about, you know, there's a lot of things going on in the country that have to be changed. One of the biggest things I think that is happening out there, there's absolutely no. There's a lot of not common sense.
Right.
And people basically, you know, are getting lost, and that has to change. And this, I got to tell you the story. Florida's a great place, folks, but Florida gets a little whacked out, too. So listen to this story. This is a crazy story, okay? And I don't need to be changing, but I think this is applicable. This is applicable as to what has to happen. Yeah. Okay, so check this out. This happens to be in one of the counties near where we live, folks, okay? This guy, okay, now this is not a young guy. This guy happens to be about 35, 40 years old, right? And what he does, he calls the Pasco County Sheriff's Office, and he says he's got robbed.
Yeah.
Right?
Yeah.
Well, wait till you hear this. This is crazy. Now, the way he got robbed, folks, was this, is that he was going to do a drug deal. And he was buying a $5 pill. He was buying a Xanax, right? And he gave the woman, no, he wanted 2 pills. I guess he was paying $5 a piece for them. He gave it, and he gave her a $20 bill, right?
Yeah.
And he didn't give her, he didn't get his $10 back?
Yeah.
So he called the cops. He called 911. I swear to God. He called 911, right, to basically turn around and say that the woman robbed him. Well,
you know, if he had taken that pill first, he probably would have thought better of it, right?
I'm telling you, man.
He needed it.
Now, that's the first one. Now, the second story coming out of Florida today, this gets even better because this has to do with the east coast of Florida. You stay right there because this one has to do with they got charged with taking $40 million. But you're not going to believe why people gave someone $40 million.
Oh, my goodness.
You stay right there, folks. This is Steve Rhodes, Tom O'Brien. We're going to be coming right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow up 146, NASDAQ up 43, S&Ps are up 16, you get gold down 14, platinum's off 20. And, now the second story, folks, let's check this out, because South Florida is really crazy, folks, okay? We're in the western part of Florida. We're laid back here. It's more Midwestern influence,
Sure.
South Florida, though, everything goes, right?
That's right.
So, story today, $40 million. So check this out. You've seen the psychics, all the psychics, okay? Well, in this particular case, this family, they would tell everyone that comes in there that you have to give me all your money. This has been going on. Now, this has been going on, folks, for 20 years.
Oh, my goodness.
20 years. Well, the bottom line is that in the newspaper today, they figure they've collected $41 million. One person gave them $20 million, and it's a huge offer. You don't know the offer. I'm not going to bring it up. One person gave them $20 million. When they busted them, right, they had bunch of over dozens of cars in their driveway, including Bentley. I mean, the sad part here, folks, is this: is that those issues have to be settled, and so stop watching reality TV. Because you know what, folks, that is the garbage that's out there.
Thing?
Yeah, well, it's just garbage. It's destroying people's mind. Go take a walk, man. Go do something. Reality
Go
TV.
to Channel 5 on Tiger TV.
That's right. That's right. That's right.
I will give you some reality TV.
Totally.
Yeah, absolutely.
Let's go to Mike in Lakeland. Hey, Mike, what's going on?
Hey, good morning, guys.
Good morning.
I just wanted to get your thoughts. The USA Today has got a maybe a contrarian indicator, a big lead story on the GLD.
Which one? That one right there?
Yeah, it's in the Wall Street Journal. It's everywhere, right?
That's right.
Yeah. And I got a question. I'm not in it or anything, but I know they advertise that they actually hold real gold and everything, and I wanted to get your expert opinions. Do they really, and why would they? Because none of those people that own shares in that, they're never going to see a speck of gold, are they? I mean, if everything...
I would speculate that they do. The reason I'm saying that is that at State Street, they have no reason to lie. If they lie, I mean, they're all going to jail.
Yeah.
Okay.
So I understand, the context because,
I mean, they're making good money. When you take a look at the money that just simply the mere fact that it's such a top favorite ETF right now. These guys are making money off this.
Right.
So no reason for them to.
Right.
So, do you think those people that own that, they'll never see any gold, right? There's no transmission. There's no way for them to deliver any, is there?
What difference does it make, though? They're not buying it to see the gold, Mike. They're buying it for the acceleration of price.
Yeah.
If you're buying it for the gold, you call Tiger Metal Exchange and we'll sell you as much gold as you want.
Yeah, but we've got folks that I talk to all the time, and one of my first questions, just in trying to qualify them, is what's your outcome? Are you trading, or are you do you want to actually have the physical gold? Because if you're trading, you need to go into the ETF of the contract.
Right.
There's no reason to pay the spread.
Right.
That you've got between the the bid and the offer on the physical.
Right.
Gold or silver.
All right, well, thank you, guys.
Have a great one, man. Have a safe one. It's interesting, folks, and this comes up, you don't hear it as much anymore, but don't believe it, and what it always is you don't want to buy gold because of the storage cost. Well, the ironic part about it, folks, is that if anyone ever says that to you, let me show you something. If you're watching Tiger TV, you can take the smallest safety deposit box, which is only this long,
that's right,
and this big, and you can fit $5 million in it.
Oh, easily, yeah. It's $50 a year.
Yeah, $50 a year. Okay, so that is garbage. What that has to do with, by the way, folks, it has to do with Wall Street can't make money on the physical gold.
Yeah.
They make money now on the ETF, but that's a paper asset on physical gold.
Yeah.
Meaning that, and of course the The risk there is that, will it be there at the end? I suspect it will. The reason I'm saying that is that the bigger risk inside that market is that you just have very quick retracements.
Yeah.
But, yesterday, well, one of the reasons even that Alan Greenspan quote, you'll hear quotes at highs of markets that things will never go down. I mean, that's how markets work, That is.
Well, and look, folks are also going to be pushing the story out there. Are things really different this time? So you'll see that going around.
That's right.
And really, also, what they're really trying to sell on there is the fact that how far of a pullback that we've had. Because you can say, hey, look, if you had bought into after the crash of '87,
right?
How well you would have performed. Now, we pulled up a chart yesterday, and you would have performed so much better if you had been trading the market,
right?
Okay, versus a buy and hold strategy,
right?
There, but the question is just like when Tom brought up the Greenspan. Is this just the first leg?
Yes.
Because look, I mean, we could go back to 3 weeks ago, when we were taking a look at March 16th. Everything was based around March 16th. The volume that we had there, we're not going to bust that down,
blew it
right?
Away.
Yeah.
Like
how long did that take?
Like a nice razor, right?
And so, if you want to blame it on high frequency trading or what have you, well, it's still here today.
Oh, yeah.
So you mean we can't blow these lows? This volume away?
That's right.
Absolutely, you can.
Yeah.
I'm not saying, but so you just gotta you got to be careful, and that's why that hammer candle is really going to be an important one to watch, because when we do blow that away, it is going to be game over.
It is, no doubt.
I mean, it really is.
Now, you want something really deviant? Check it out. So Goldman Sachs, folks, bottom line is that they, more than likely there's going to be charges coming down the line. There should be.
Yeah.
Goldman Sachs is up. So Goldman hit a low of 104.71 today. You're at 108.24. It's getting under that. Now, that's the first part. If the second part, if you're watching Tiger TV, what I'm going to bring up and I'm going to show you something. Now, watch how deviant this gets, folks. The biggest buyer of Goldman Sachs, in the last 8 months, has been Goldman Sachs themselves. First, I'll put up the buys for you, and you're going to see it right at the very top. There she is, Goldman Sachs. 6.4 million shares, 4.9% of the equity. So what you have there, I'm sure they're out there this morning buying their own stock. That's legal. You can buy your own stock.
Sure.
They probably have something in place there, but it's important for everyone to understand how these markets run.
Yeah.
It's like, hold it, we got problems. Get in there and stop buying. I'm sure they started buying right after the news came out last night, because it took them an hour, for the PR people to get going, and that's pretty late. There's no doubt about it. Right now, you get the Dow up 141, Nasdaq's up 43, S&Ps are up 15. You stay right there, folks. And, of course, don't forget, next hour right after this, Steve's going to be coming right back with you. Don Kaufman, options, Ken Shreve this afternoon, 3 to 4, and then me at 4 to 6. We're going to be right back.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. We get the Dow up 121, Nasdaq up 39, S&P's up 13, and volatility is right in these markets, no doubt.
Absolutely.
Up, down, and all around, right?
Absolutely, yeah. What's your take on silver? Right now.
Okay, let me pull that
We're down to what, 35 cents right now for the day.
So that swing point, we got a swing up here. Yeah, if it stays over that swing point, it's going to get interesting here because, okay, so 42.29 is the number. But that being over, it's like, hey, you can spike to that $45.
Yeah.
I mean, there's no juice up here, but until you get back inside that swing, it's like, hey, you're building a floor, man.
Yeah.
So that's interesting in the context of gold. What we did have with gold up here is that gold goes topside in a big way. It's $1,917.90 last night. That was illiquid. But it's holding up right now. Gold's only down $9. That's nothing. I mean, that's in the aspect of percentages, we're talking nothing. We're talking, what are we? We're 0.4%. Big deal.
Yeah.
It's been running up 2.5% every day. So it does say that you can have another spike.
Now, I think the other big news, but not necessarily big news, is kind of the shortage of corn, right? And that, corn is going to. I've been actually taking a look at.
So let's take a look at this baby. So we'll go.
Silver 7 and a quarter a bushel.
7 and a quarter. And so we get 24,000 contracts out here right now. Yeah, that looks to me like you get a consolidation. I mean, can it? Yeah, it's.
It's kind of an ABC up, right, which would take it back at least to the high, or?
Well, it'd be sweet if it could. No, I was just saying, because see what you have here, folks, is that you're at 724, And this would be a nice Gartley, because what you have is that, well, actually, it
could end up being a butterfly.
Yeah, it could end up being a butterfly, because you're over the 723.5 right now with lighter volume, dramatically lighter too. 24,000 contracts versus 77, and that's what you like to see if you're going to sell that on the other side. You know, so that's let's see, so 723, 603. Yeah, that's $1.23. $1.23, 658, 758, 788. Yeah, it's a butterfly.
Yeah.
If you get a butterfly out of it, that'll be beauty.
Yeah.
That will be a beauty.
Good time to sell that.
That's right. No doubt. You know. So the contract itself. Now the way that the gold contract is laying out here, folks, it keeps coming back. But you can see when you set this up, if you happen to be watching us on Tiger TV, every one of these lows has monster volume. You know, so it's going to have a tough time getting up over this 1894 level. You know, you're only at 1882 right now, but
yeah. So now, you know, if you're taking a look at gold, what we would, you know, is there an intraday basis that you'd be looking at in order for it to bust a swing before you'd even consider the DZZ at this stage, or would you because on the daily, you know, you've got a long way down before you'd bust through a swing.
Yeah, you do.
Right.
On the way up, you'd be a nice spike to 1888 would be a nice sell. You know, I know it's a long way from 1881. It doesn't look like it's going to make it. The reason being is that gold, and it could get back here today, is 1846.
Yeah.
You know, it's a monster. There are monsters down there. Now, another nice trade in gold is inside the GLD, and this is defined risk, folks, is that you'd be selling a vertical call spread.
Yeah.
And, you know, you get till the third week, it's the third Friday, so it'll be a week from, 2 weeks from this Friday, you know, to get the number you want. And, you know. Listen, folks, you stay right there, because we got our man, Mr. Steve Rhodes, coming up next. And, of course, call Don Kaufman. Don Kaufman, the option pro.
That's right. He'll give you the vertical call spread.
Absolutely, totally. Dow is up 104, NASDAQ 36, S&P's 13. Have a great one, folks. Have a safe one.
Stay tuned. I'll be right back.